Hello, everyone. Thank you so much for joining us as we have gathered today to read out the latest numbers from Spectrum's Investor Confidence Index, as well as go over some of the recent key findings and implications from our professional profile series. This is the readout of our August data for the September 2017 webinar. My name is Randy Wostrowski, a director here at the Spectrem Group, joined by our president, George Walper. George is going to start off by going through some of that recently released data from our millionaire and affluent investor confidence indices, and then I will be taking over and talking about some of the key findings from the initial portions of our professional profile series. At the end, we'll recap with a couple of things relative to our new High Net Worth Insights newsletter and how it's been continually expanding as the month have gone by. And without any further ado, George, please take it away.
Thank you, Randy. And hello, everyone, from me. As Randy said, we're going to highlight a couple things. One is our index, which we publish the first business day of every month. So this was published last Friday before the holiday weekend. And then a piece of research that we have just completed with doctors, lawyers, and attorneys. It's a key wealth segment, as you know. Professionals, as we think of them when you add them together, are a key target opportunity for most wealth advisors. It's a particular component of the wealth market that we've looked at for years, but we combine some quantitative and qualitative research that Randy will talk about. Pretty interesting research. The index this month, and as a refresher, the index is conducted about the third weekend in every month with wealthy investors worth $500,000 or more or $1 million or more. And we've been doing this since 2004. And we look at a number of components, a high-level index, a number of subcomponents, which we will go through. What's interesting this month, that's been interesting for the last 3 or 4 months, when you think back over the last 10, 13, 14 years or so, anytime that there's a major world event, or anytime there's some major political issues, or anytime that there's some angst in the market, we typically see our index plummet pretty significantly. And so when you think about everything going on in the last couple of months with Korea, a lot of the continued political angst in Washington, both at the presidential level, but more importantly at the Congress, House of Representatives, and Senate, you would think that our indexes would be moving all over the place. And what's quite interesting is they basically have been flat. They've been flat the last 3 or 4 months. This past month, they're down 2 points, so that's essentially flat. And when you look at it compared to a year ago, which is more interesting, they're basically flat. What's interesting about a year ago is this was now honing into the pre-election months starting around Labor Day where people start focusing on the election. And that's the millionaire index. You look at the overall wealth market affluent index, the same thing. It's up a point from 1 month ago, and it's flat for a year over year. And as I said, volatility-wise, emotionally, you would think that things would be quite up and down. So the top section of this chart shows the past 12 months, and the bottom chart shows since 2004. But I always like to look at the top part. Where you saw the biggest drop was August, and that's, April, and that's where you started to see Korea really enter into the sort of viewpoint of America. But the last 4 or 5 months, we've been basically trending upward a little bit, and as you saw, year over year, it's flat. You would expect a lot more volatility with some affluent and millionaires thinking about what's happening in the marketplace. No question that the market's being continually at, near, breaking record highs, with the exception of the last couple of days. You would expect them, people are still feeling good. A key component that we've always dive into, we ask a lot of subcomponents, is how do folks feel about their overall outlook for their family? We use the word household, but it really is their family. And here you can see back 12 months, it's fairly flat the last couple of months, down a little bit, back up to where it was in April. It's kind of interesting, but when context to where it was in February of 2009, after the fall of 2007 and throughout 2008 with the economic crisis, where it was the lowest number of a minus 33.8, and you see where it is now in the highest in July 2004 of 46. You're essentially, this past year at least, somewhat in the flat, stable range. The subcomponents, which are also critical components, the overall, which we looked at, how do people feel about their household income? A little bit down from last month, up from a year ago when we looked at this in last year. What do they think about the overall economy? Essentially flat from last month, a little bit more positive from a year ago. A year ago, as I said, during the election, the economy was a key driver of how folks felt from a political affiliation between Republican, Democrats, and Independent. And then overall health of where their employer is and their overall assets, you can see essentially up a little bit from last year as well as from last month. The political environment just won't go away. You would think that international problems would be the biggest driver affecting folks' economic outlook in terms of stories in the news or the media. But the political environment, which is such a continual message from every news source that you see, be it cable TV, be it internet-based platforms, be it radio, newspaper, media, print, everything is all about politics. And it does influence this market. It's also, this group of investors. It's also something that advisors should talk to their clients about on a regular basis. International problems I would have thought would have been higher, and then these other factors which typically drive the index are somewhat stable or flat. Excuse me. Here you see the same analysis broken out with the overall affluent population and then millionaires, with millionaires just a little bit more concerned on a political environment, but essentially everything else is quite comparable. A key component we feel for advisors to pay attention to is how do wealthy investors feel they would like to invest the next 6 months to a year between equities, bonds, short-term, real estate, traditional sort of major asset allocation classes. Equities, stocks, and then equity mutual funds below. The last couple of months, they're fairly constant, lower than the highest point, which was in March of 2012. And then a little bit higher than the lowest point in May of 2008. The same with fixed income. Again, fairly flat month over month and year over year, and significantly off the highest and lowest points that we've seen here. So you have a number of wealthy investors who are riding this out, waiting to see what happens politically, and that might take many years before the waiting for political environment to change. So let's shift our focus to, as I mentioned, a study that Randy's going to talk about, our in-depth analysis of doctors, lawyers, and accountants.
Thank you, George. And looking at Spectrem's first ever professional profile series, just a little background on the research itself. We're still in the midst of conducting some qualitative online focus groups right now with a couple of the components that we have here with the accountants and lawyers. We've created this report in sort of a hybrid fashion. By that I mean we've pulled some quantitative data from our online surveys with wealthy investors where we're in the field every single month asking questions about concerns, attitudes, behaviors, actions, etc. And we will, when putting together this final report, have both the qualitative and quantitative insights. And so you'll see here in a couple of slides, we've included some of the quotes that we've gotten from these ongoing online qualitative kind of, again, focus groups, and we have these charts here that highlight some of the quantitative survey data that we've collected in the past 9 to 12 months. First one, when it comes here to these personal concerns, as you can see at the top of the page there, from an occupational standpoint, doctors are certainly the least concerned about their own health, but most concerned about the health of their family, and if something out of the blue kind of comes up. But here it's very important to look at the gender differential between the responses, and you see the health of their spouse among female doctors, almost 3/4 of the respondents, as opposed to just over 60% of male that said that was an important concern. And then across the board, that's something where you have the female accountants and the male accountants, that the female had almost a 15% greater incidence level of caring, and then it's the exact opposite when it comes to attorneys, where it's the male lawyers that are more concerned about their spouse's health as opposed to female. But even going into the kind of the bottom portion of this chart here, you will see that among female doctors and female accountants, spending their final years in a healthcare facility is really a significant concern among the female respondents in those two occupations, much more so than male and opposed to all of the respondents. Looking at some of the concerns about retirement, again, what you see here jumping out is the gender-based comparison among the doctors, and in particular male versus female, where the female doctors really have a much higher response rate and level of concern about everything regarding retirement, and in particular when they want to retire and being ready and adequately prepared. Certainly here you see among the overall millionaire doctors in the left-hand portion of the page, where you see almost a quarter that do cite themselves or their spouse being forced in retirement before they are ready. So even among these affluent doctors, they share many of the same concerns of the overall affluent population regarding the impact on retirement planning and their overall financial blueprint that you could have from sort of fluctuation or significant downturn in the marketplace. So looking at the types of primary advisors that are used amongst these three occupations, doctors, accountants, and lawyers, you do see among all three the most popular item is the most popular advisor is the full service broker there. But there are some significant differentials. Although you see the accountants and the lawyers that are over 40% citing full service broker as their primary advisor, you only have 31% of doctors. And then you go right below that and you see the independent financial planner that is much more highly cited amongst the doctor population. And then even below that, where you have the RIA focus, much less so from a doctor standpoint, and then much more so from the standpoint of lawyers. And then some of the other occupations that you see, surprisingly enough, among both doctors and accountants, you have over 10% that cite the discount broker as their primary advisor. So you do still have many of these folks that are highly educated, that it kind of coincides with data that we've seen in the past, that we've asked questions around their ability to do a better job than a human advisor. And some feel they do have the kind of mental acumen and ability to manage their money better than a financial professional. So here, when it comes to advisor communications, you see a majority relative to the contact that they are currently getting, as well as to the contact that they have preferred. Is the two largest categories is monthly and quarterly. But looking at the far right-hand side, when we're looking at female lawyers, you see a much higher current contact and preferred amount of contact among the female lawyers. There you have almost 15% that prefer and receive to get weekly contact, which is much higher than both the overall millionaire and overall ultra high net worth population, as well as male lawyers who have only 5% preferred and are only getting that amount of contact among 3% of respondents. From a referral standpoint, you can see here kind of accountants versus the other two professions. You see the familial implication. So looking on the left-hand side of your screen, you'll see parent and child among accountants at 21% and 8% versus 16% and 2% of other occupations. So among accountants who initially were referred to regarding their financial advisor, it seems like a much more familial atmosphere, as opposed to the other occupations where it was more a friend, associate, personal contact, or possibly person that they do business with in some capacity. So that is something to keep in mind when looking at the way that the referral process is made among this professional population. Just a quick reminder about our monthly High Net Worth Insights newsletter. This is something, as I mentioned at the start here, that we continue to bulk up and expand. We continue to receive very high demand for this monthly touch point amongst our clients, where we highlight all of our ongoing research with wealthy investors across the United States from both a quantitative and qualitative standpoint, and including those indices that George reviewed. If there is any interest in learning more about this on a personal or enterprise-wide subscription, please do not hesitate to reach out to me and to let me know. Here's just kind of a quick example of the front page and an example of all the different types of topics that you'll see in one of these High Net Worth Insights newsletters, again, that we do publish on a monthly basis and usually deliver to our clients the first business day of the month. So with that, I want to thank you very much for joining me today. And George, do you have anything else to add?
I would just add one thing to what Randy was chatting about on professionals. And that is, professionals are a group of investors that it's pretty logical that coming out of their education, law school, med school, etc., they may or may not, most likely will, have a significant amount of debt. But then as their income grows, they pay off the debt. But when they really start thinking about retirement, and when Randy was talking about that, their biggest focus that they need help from an advisor is converting from a mentality of income every month, because so much of their assets is income based in terms of how they created their wealth. They don't have a company to sell unless they were a doctor who happened to invest in some MRI companies, etc. The point being that we find that doctors and lawyers and accountants, but specifically doctors and lawyers, really need help 3 or 4 or 5 years before retirement to start understanding and thinking about, all of a sudden when they stop becoming earners, their monthly income drops significantly without something else to sell, like a senior corporate executive selling stock options, etc. So it is a very different type of dynamic of servicing that kind of client, yet the opportunity is huge, which is why, as Randy said, we dove into that particular research. Thank you very much for joining us, and we look forward to talking to you next month.